And let's just check in on the Kenyan market for the day, looking at the NSE 20, 4,810 points. You're looking at the market dropping back there once again today. It certainly has been on a weakening path for the past few trading sessions. Checking in on the currency, which of course has diverged from weakness in the equity market to 83.75 against the dollar and continues to be stable at around these levels. Well, let's cross over to Nairobi, get an update on some of the market-moving news on the day. Crispus Otieno, fixed income dealer at AIB Capital, standing by as our market watcher. Crispus, thanks so much for joining us today. So let's firstly kick off with your view on the banks and primarily KCB versus equity and how they're looking to tap into remittances and tap into cash from the diaspora, because according to the latest news from the Central Bank of Kenya, you got to KCB behind the likes of Equity and Cooperative Bank, in fact, when it comes to tapping into those remittances. But it looks like KCB has a plan to help move it up the ranks. Tell us about that.
Yeah, that's a very. They've just signed a deal with Western Union, such that when a client receives money from the diaspora, the money is credited directly into his bank account. Now, the effect of that is to increase the bank's assets, basically to increase the bank's deposits and enable it to move further on.
Mm-hmm. So, how much money do the banks in fact make from remittances or handling of remittances?
It looks like it's a big money business, because we are looking at sums of 1 billion, 2 billion last year for both for equity and KCB respectively. Mm-hmm. So it should basically be in the region of that in terms of deposits. So from there, who knows what you can make out of it? There's a lot of cash to be made once you have the deposits.
Let's move on to some other news, because we know that Safaricom has been actively traded in the market and sitting pretty much at that 57-month high today, 660. Some are saying that 7 is in sight for the stock, but it's had a fantastic rally this year, up 30%. Also, some news yesterday that it's signed a deal with General Electric. That's to power its stations if you've got power shortages. What's your view on the company right now, in light of the fact that it certainly has been a stock that has been in demand from the market perspective?
In fact, I expect to continue rising up. We've seen the regulatory. There was a regulatory umbrella that was stifling their growth in terms of having them first approaching the regulatory authority before they increase any prices. But on calling, yeah. But I'm seeing much that is going to that's not going to affect them as much. We have seen they've diversified properly. We are seeing there's revenue from M-Pesa, there's revenue from data, there's revenue from the SMS system. So really, the only way is up. We have seen international investment banks. We've seen Morgan Stanley valuing it at 7, saying that we are likely to see a 7 shilling.
Mm-hmm. And of course, we've got those results coming out in the next 3 weeks. Let's turn our attention to the fixed income space, because that T-bill auction, the results have just come through. We had 1-year paper and 182-day T-bills auction today. You've got the average yield of that 364-day T-bill sitting at 12.26%, and that's fallen back from 12.4%. And overall, looks like a successful auction coming through, and yields once again ticking lower. What's your assessment of that?
I'm thinking yields will continue going up, down and down, lower and lower, if the trend on the T-bill market is anything to go by. Mm-hmm. Again, today we're also expecting the results of the 15 and 5-year. There is an auction. I think the results should be out anytime soon. And I expect it to basically mirror the trend, because interest rates have gone up to a level where we are seeing 13.7, 13.8 on the primary. That has to come down at some point.
Yeah. So as you say, we've got 25 billion shillings that is being auctioned today, and the results expected anytime soon, 5-year and 15-year paper. So are foreigners wanting to buy longer dated paper right now, support Kenya when it comes to specifically infrastructure growth plans?
Yeah, when we talk about supporting infrastructure, we've seen demand of the infrastructure bond coming to being at being very high, because in the past 3 months we've had we've had yields from the infrastructure bond coming from 12.5 to 11% levels. Really, if you look at the structuring of those bonds, they are actually tax-free. So for anyone who's coming to pick them up, you're assured of good returns, of around 12% return for the FP5.
What's your assessment of the major risk to the strength that we've seen in the Kenyan bond market so far this year, and I suppose particularly post the election and the announcement of Uhuru Kenyatta, of course, the confirmation of him as the president?
I expect yields to go down because from January from January we've been seeing a lot of government mopping. I'm thinking now they could be mopping, but at a decreasing pace. So really, that will have an effect, and we also need to see interest rates stabilizing and coming down low. So thereby, yields on long papers should also come down. Should follow the T-bill. That is, they should come down lower.